If you ever get frustrated by making any investments or any trades with crypto where you get this phenomenon where you buy and it dumps, or you sell and it pumps, right? That happens all the time in the crypto markets on short-term and long-term time frames, but there is reasoning behind that. And if you learn how these market makers think and why the prices move in the way that they do, you can actually use that to your advantage instead of getting caught every single time. And that, of course, can then become very, very profitable. So whether you day trade on short-term time frames, the minute, 5 minute, 1 hour time frame, or whether you're just a swing trader and you make buy and sell decisions and longer-term investments every couple of weeks or every couple of months or even just once a year, what I'm about to break down for you in today's video is hopefully going to be very helpful and give you a better understanding, and you can use this to help you understand that price action and make better decisions. So today's video is actually a breakdown of a complete scam pump and dump on the Bitcoin chart on the 4-hourly time frame, with reasoning why it pumped, why it stopped pumping, why it dumped, and exactly why it decided to reverse at the various levels that it did. So without further ado, let's dive into today's breakdown, and hopefully that is going to help you going forward. You might have to watch this a couple of times, so take some notes and replay this, come back to this as you want, because if you're new to this, it might be a little bit much to take in first go, but it is worth studying to learn how these price actions move. In this video, I just want to break down the last pump and dump and the last trade over the last couple of hours, and really break that down into the concepts and into the different time frames to help you really understand how the market moves, that you can learn how to use this on your own. And again, these concepts happen over and over again as I teach in the TA course, in the technical analysis training. So go through that if you haven't gone through that. All the concepts I'm about to share here, the fair value gaps, the imbalances, everything, the RSI divergences, the Fibonacci golden pockets, I break those all down in dedicated lessons. So you need to go through that first, and then it'll make more sense when I explain this. But let me explain this for you. So over the last, say, 24 hours or so, we had the scam pump, as we've been seeing. And I say scam pump because it's blatant manipulation. It's short squeezes, people are shorting, it pumps, and then it dumps instantly back down. And we've been seeing that over and over the last months in this market because there's lack of liquidity, or there's market makers or exchanges or whoever is playing these games. They pump it, they suck in the retail traders, and every time they liquidate them over and over, it's free money for the whales and the market makers. And then it dumps, but then why does it reverse? And how does it reverse? So let's dive into that. And let's start out here. This is a 4-hourly chart. And let's explain this a little bit more real quick. So what we have over here is the fair value gap. So if I zoom in, fair value gap imbalance, you can see it's the difference between the top of this candle and the bottom of this candle. It leaves a gap, and then when it moves up, it tends to come back down. Again, go and watch the training of fair value gaps if you haven't watched that yet. So you can see perfectly, it came back into it, bounced, perfectly back into it, bounced. And this has now become a support for the longer term. And you can see we came back into it, bounced, and now we're sitting on it so much. Now, of course, also the rule here, which we'll end up seeing how that plays out, is but basically the more times price tests the support, the more likely it is to break down below it. So we have yet to see that breakdown, but my guess is going to be that eventually this is going to be breaking down, especially since we've tested it so many times. Every time we're making lower highs here, we're getting scam pumps, and every time it comes back down, meaning there's no demand, there's no follow through, because if there was, we wouldn't come all the way back down again. It might dump and then we continue, and we should go higher if there was demand, if there was really a bullish trend behind this. But it is not. It is the market makers or the manipulators who are just pushing this up with futures and just buying this, and then when they're ready, they dump it, and it dumps all the way back down again. And everyone who was shorting on the way down, thinking the breakdown is going to happen, they get liquidated on these pumps. So yes, it is very likely, in my opinion, this breakdown will happen, but they're trying to rinse as much money from retail traders as possible, who are all betting on this breakdown, and every time they get flushed out, and they can only do this so many times before eventually it does break down, but that is what happens. So they try and short the retail traders, squeeze them out, and then everyone, not everyone should I say, there's obviously all the influencers and the moon boys and the retail traders there that are like, every time it pumps like this, oh, the bottom is in, this time it's different, Bitcoin is finally showing its true colors as an inflation hedge, blah, blah, blah. And of course that is not the case, but all these retailers on these pumps, they start buying in over here. They start FOMO buying, thinking, hey, this is it, the bottom is in, we're going back to all-time highs. And obviously that's not the case. So that's how they catch these people over and over. They're catching the people who short into the bottoms, thinking the breakdown's going to happen, they get liquidated. Then they catch the moon boys who start FOMOing in over here. And you can see when it starts to move like this, most of the time it tends to be distribution, where the smart money who caused the pump, they bought down here, they're distributing over here, and the moon boys, the FOMO people who are buying here, they're the exit liquidity for the smart money. When they're done distributing, it dumps all the way back down again, and the process repeats over and over and over and over again. Because most people just don't know how the markets work. Retail traders, they should all sign up for intelligent cryptocurrency, of course, and go through this training. But maybe it's better this way anyway, that we know how these markets work and how they behave. So we know that you don't want to be shorting at the bottom of range, and you don't want to be FOMO longing after a big pump like this, because that's basically just how you get wrecked. It's common sense. But anyway, let's talk about specifically this last move over here. And as you can see, it was sitting over here while it was building up. So we had a bit of a bullish divergence. And at this point over here, before the scam pump, I actually published this on Twitter, but also in our Discord, of course, where I was saying, you can see over here, we were sitting at that point. I was saying, look, the stock markets, they look bad. This was on a weekend, on a Saturday, and the weekly closes was bad, so we probably get more downside. But since it's weekend, the lower time frames are showing some bullish divergences. Maybe they scam pump it to take out the highs there at 20.4 and then dump and break down next week. And just to show you, this was the idea, that they take out these highs over here around 20.4, then it reverses and comes back down. So as you can see, that's almost exactly what happened. I said 20.4. You can see the high over here was 20,385. So I was off by $15. And that's a pretty accurate prediction to make ahead of the time, the scam pump. And it came all the way back down, as I said, and we just haven't had the breakdown yet, as I still think is likely. We will end up seeing what happens. But, you know, you can check the chart in hindsight by the time you watch this, whatever ended up happening there. But how was I able to predict this? Again, because this is how these markets work. Okay, and the market makers, there's no demand here. So any of these scam pumps, we've seen it over and over. They always tend to come back down. And the reason for this is when we see these lower highs, you can see it keeps on making lower highs, but it doesn't break down just yet. And this means there's a lot of people who are betting on this breakdown. Every time it makes a lower high, they're shorting it with more and more and more, thinking, hey, now it's going to drop and it's going to break down, it's going to go to 12,000 or 10,000. That's what they're doing, okay? They're betting on that. And as this continues to move like this, it sucks in more and more retail traders who are betting with leverage. And how retail traders tend to think is they open a short position and they put their stops above the previous high, or above the previous high, above the previous high, because they think that's safe if it's going to break down. And then what tends to happen more often than not, as you can see, because this is how the market makers play their game, is once all these people are sucked in, we get this massive squeeze that they engineer, right, through futures trading and you know, just pumping a whole lot of money into the market at the right time. They catch these traders offsides, and as they get liquidated, it creates more of a pump, and in one go, everyone who is shorting this with stops above these highs, you can see it went to just over here. So anyone who placed a stop over here was short, they got liquidated. Free money for the market makers. Then they distributed their position and dumped all the way back down. And everyone who bought at the top here, they also got liquidated because they're longing for thinking, hey, it's going back to all-time high. But no, it didn't. It went all the way back down. So, okay, learn how this works in the markets. And be careful of these short squeezes. It obviously works in the opposite direction too. If we're in a bull market, the inverse. But let's focus on this now. So let's zoom in a little bit more over here. So let's zoom into the hourly chart, or maybe even let's even zoom into the 15 minutes. So you can see we actually had this accumulation pattern here, where we had a double top, a triple top, but it's basically like a wedge, I guess, if you can call it, or an ascending triangle if you want to talk in retail terms. I don't really like to use it too much, but you can see we got this, and then we got the breakout after that. And as soon as we broke this level, this top also, basically the scam pump was there. It's going to take out the previous highs. A lot of the time it does this. So if you see these lower highs like this, but we create this flat kind of environment here, a squeeze is very likely, and it takes out this high, this high, this high, this high, this high, this high, and maybe even this high. It just didn't get above it, but very close, very close. You can see over there. So there was actually the possibility, I was kind of expecting maybe for it to go into this range, just a little bit above this, into 20.5 to 20.6, but it didn't get there quite yet. But you can see over here, if you're looking at the lower time frames, when you were looking at this pump developing, and it's already taken out most of these highs, you can see the distribution starting to take place over here, right? And that's usually 3 thrusts to the upside with a negative divergence on the RSI, right? So you can see over here, negative divergence on the RSI, and when you're seeing this and you expect this is a short squeeze scam pump, you start to see the distribution once again, you see the negative bearish divergence, and then it's possible to either get out if you were long, or to potentially take a short position and try and catch that ride to the downside, which is not always as easy because obviously there's a lot of distribution, and if you're too early shorting, you get stopped out. But as long as you're following the 1% risk rule, even if you get stopped out 2 or 3 times, trying to catch the top of this to short it, that's okay, because when you catch the move to the downside, it can be 5R or 10R or 15R, and then you easily make back what you lost by getting stopped out. Okay, so obviously all those concepts are explained in the course and the different videos in more detail, so go and watch that specifically. Everything is explained: bearish RSI divergences, Wyckoff distribution, these 3 thrusts, how that works, the combination of Wyckoff distribution with the bearish divergence creates a high probability setup for the downside, especially if you know also that the trend is bearish and any pump is more likely to be a scam pump, because it's happened over and over again over the last weeks, over the last months, and then it comes all the way back down. Now, let's take a look at the downside and try and figure out how we could know where it was going to bottom and how we could get this move to the upside. So let's take a look at the downside in real time, and you can already kind of see what's starting to happen over here. You can immediately spot the bullish divergence over here on the 15-minute time frame. That is giving us the indication that, hey, at this point, this was probably the bottom. And why did these things happen? Okay, so what we have here is also obviously a lot of fair value gaps. Here's the first fair value gap, it broke straight through that. Here's another fair value gap, broke straight through that. You can see the point where the pump started, it broke straight through that. It took out this low, it took out this low, and it even got close to taking out this low. So people who were longing this all the way, right? Longing, FOMO longing as it was going higher, who put their stops under previous lows over here. Even someone who longed here and put their stop here, they got liquidated. Someone even here who longed anywhere up here, put their stop below this level, thinking it would be safe. Nope. Thinking it would be safe over here. The first time, yes, maybe they got safe, but then it went even lower. It took out this low, took out this low, took out this low. So you can see how this works. You can see how the market makers think, and you can see how the retail traders think, because that's what they do. They end up FOMO longing into a move and chasing it up and putting their stops under recent lows, thinking it will be safe. And, you know, you could get lucky, you know, if you do that and you long over here somewhere or long over here, you get lucky, maybe you catch a little bit to the upside, but a lot of people get greedy. And then again, they don't take profits, they don't move their stop up, they keep it there. So they're in a profit a little bit, unrealized gains, they don't take it, it dumps, goes below their entry, and it eventually takes out their stops. And it happens over and over again to the upside and to the downside also. So when this started dropping, and even if you weren't in a position at that point in time and you want to start thinking, where is this move going to stop? Well, look at the previous lows, because it's likely to take that liquidity, to take those stops that retail traders place at these levels and just go below it. So we had this, hadn't taken out these lows yet. We got a second drop over here, right? Which tends to happen because, again, what we can see over here, as it was happening in real time, you can see there's a fair value gap over here, right? So what happened? We got the initial bounce to the bottom of the fair value gap over here. It got rejected, and we got the next leg down, which took out these lows over here. So anyone who had a stop over here below these, they also got liquidated. At this point, when we got the drop, we got the bullish divergence over here, showing us that, hey, you know, this might just be a liquidity grab or a stop hunt, but the RSI divergence is not confirming it. Also the 5 minute, the 1 minute. So at this point in time, we can start looking for a bottom. Then, okay, let's zoom in a little bit more. Let's zoom into the 5 minute chart over here to explain it a little bit more. Okay, so we got our bullish divergence. You can see even on the 5 minute over here. Now, what was the target for the upside rally from there? Well, it was quite simply this level over here, which was the first support from the initial bounce. After it broke that, that has now become resistance. Okay, which means we are looking for this to flip this level before we start longing. So a lot of people will come, they'll come and they'll buy this top again, thinking that now, okay, the bottom is in, there's the bullish divergence, and from here it goes up. But no, what happens there, it goes down again. So anyone who bought here, FOMO bought, with high leverage, they get liquidated on this drop once again. Okay, and then they start shorting it over here and it goes up again. So that's how it works. So what we're looking for here is a flip of this support level, and that turned resistance. Once we flip that, we can get a move to the upside as we've seen over here. But the first time it got rejected. Okay, and where did it go? When you look on it over here, so you put a Fibonacci retracement on the move from the low to that rejection high, and you can see the first time it moved down here into that golden pocket. It took that liquidity over here, so anyone who's longing this here, again it wicked below there, into the Fibonacci golden pocket, and you can zoom in even more. Let's zoom into the 1 minute chart over here, because you can see exactly what happened is as it wicked down into this, you can see there's a bullish divergence over here. So same concept applies. We have the drop into the Fibonacci golden pocket with a bullish divergence. It doesn't matter if it's the 1 minute or the 1 hour or the 1 day or the 1 week. These concepts apply. Obviously, just the larger the time frame, the longer it takes for the move to play out. Okay, but we did get that, and then it bounced to the bottom of the resistance, support resistance zone over here. You can see exactly over there. It bounced to there. Then we got another drop into where you can guess it already, the fair value gap on the 1 minute chart. So from these lows, right, the second low that created the bullish divergence of the 15 minute chart, we got that bounce, and when we got that move up, it created a fair value gap over here on the 1 minute chart, and perfectly filled that. As you can see exactly over here, perfectly filled that. Then we got a bounce up, we got a wick to the top side, and you can see over here this move over here. What did it do? Well, anyone who was shorting this thinking it was going to break down and put their stops over here, you can see also a mini little fair value gap over here. It took out all those stops. The people who were high leverage shorting over here thinking it was going to break down, took them out. Then same thing, same concept, people who longed this over here, it dropped straight back down into the fair value gap a second time, take out anyone who FOMO longed this over here, and then it just shot up to the upside. And again over here, there were people who maybe shorted it again thinking, oh, this was a scam pump, it's going to continue down. Nope, then it massively shot up. Okay, so hopefully this explains a little bit the concepts behind this. It all works over and over and over again. RSI divergences, fair value gaps or imbalances, and the Fibonacci golden pocket. And you can see here, whether it's the 1 minute, the 5 minute, the 15 minute, the hour, 4 hour, weekly, it all works in the same way, but obviously the move is much faster. And to really catch those ultimate lows or those ultimate bottoms, you want to be looking at the 1 minute, the 5 minute, the 15 minute chart, because that is where the movements happen so quick. And if you can catch a long or a short on those very low time frames, then it's very possible with that precision to be able to really catch the bottom or top of a move, and then be able to ride it all the way up or all the way down and potentially keep it and find almost perfect entries that way. And obviously it's easier said than done. It does take a lot of study, it takes a lot of practice, and identifying it in real time is, like I said, it's a bit easier than it sounds. But with enough practice, enough studying, you'll start to get more familiar with these concepts, how they work, and you see them repeat over and over and over again, and then you just get better at learning where to enter, where to exit, and avoid getting trapped and rinsed by the market makers like most retail traders do. So now going back to the 15-minute chart, seeing everything, how it has unfolded, and explaining how this whole pump and dump moved, and with reasoning why it dropped here and why it bounced here. Now you can see what's happening over here. So we got a pump, we flipped this level over here, and now as long as we stay above here, also flip the 50 moving average here on the 15-minute chart, we have the bullish divergence. So as long as we stay above this level now, it is likely that we continue going higher to once again liquidate the people who shorted the bottom over here thinking it's going to break down. They get liquidated. Now it's their turn. Okay, and you see how this works over and over again. So we had a bit of a squeeze. Maybe it comes back, it consolidates a bit. I think we at least take out these highs, right? Because there's people who are shorting this all the way down with stops. So again, the rules apply. They probably stop hunt this and we go at least to this level. Again, there is also the fair value gap. So we at least test this. We flip this. Most likely then the next level is the Fibonacci golden pocket from this last move down, which was about 19,720. So again, if you're watching this now, if you want to go and look that up, I have no idea what's going to happen, but that would be my guess. As long as we stay above here, we can flip this and the target would likely be there, and maybe even a little bit higher if it continues past that, because there is still a fair value gap up over here at this level too. So we could go up maybe as high as 20,000, but again, if you're looking back at the 4-hourly chart, right? And this is important to understand how the different time frames work, because if we're looking at the 4-hourly chart over here, again, we're testing this bottom support so many times that I think the likelihood here is that we do end up eventually breaking down and going lower, even if for a little bit we scam higher and we go to 19.7 or 20K again before dumping again to rinse the late shorters once again, suck people into thinking we're going long, and then the same thing happens. And I think just looking at the stock markets and everything now, that's what's going to happen. But obviously looking back on this in hindsight, you'll be able to know what happened and if that was the right thing or not. But either way, whatever ends up happening, we adjust to the charts and we let them tell us if they break key levels, if they continue higher, can flip bullish. If it goes the other way, we can flip bearish. Look at those fair value gaps, look at those Fibonacci levels, look at where they hunt stops for liquidity, and that way you'll really be able to predict the market much better and be able to take better and more profitable trades and positions. So hopefully you enjoyed this, hopefully you learned from this. My recommendation would be just go through the whole course, go through the different training modules on the specific setups and the concepts, go through that over and over again as much as you need to, and then just study and practice. That is what it comes down to. The concepts work. As I've explained it, I've obviously been doing it for a long time, so it's easy for me to explain this, but it does take practice and it does take repetition. But if you can figure this out and you can master this, there's so much money to be made from these markets. All right, so I hope you enjoyed that lesson, and I hope it gave you some insight into how these market makers move these markets and the price action, and that none of it is actually as random as it may seem, and that the reason it moves in this way is really exactly this: to catch as many retail investors as possible, or day traders that don't understand this, to be able to get them to buy tops and sell bottoms and take their money over and over and over again. So this works on small time frames, it works on larger time frames. Try to understand and try and use these principles whenever you're making your buy and sell movements, because it should help you get much better entries and exits, and at least help you avoid making the common mistakes that most retail traders and day traders make, which is buying at the wrong time and selling at the wrong time. You should be doing the opposite. And this really, really does work this way over and over again. So if you want to learn more from me, like I said, this is just one example video inside my course. There's over 30 more videos, actually 35 or something, and I'm still adding more to that continuously, examples like this over and over and over, to help you understand how these price actions, how these markets move, which, like I said, if you are trading, whether it's day trading or swing trading on a weekly or monthly basis, having this knowledge and this understanding can really make a huge, huge difference. So if you want to learn from me, come and sign up. Second link in the description down below. There's a full money back guarantee, so you can go through the whole course, and if you're not happy or you don't think it's the right fit for you, you can get a full refund, no problem. But if you are learning or you are trading and you find yourself in losing trades or losing money, there is a reason for that, and you can learn how this works so that you can start becoming more profitable. Either way, I hope you enjoyed today's content. If you did, smash the like button, subscribe to the channel, Leave a comment if you have any questions, and I will see you in the next video.